a blockchain, and really it's just a ledger. It's a list of transactions in the Bitcoin ecosystem. So the way that you spend is by adding a transaction to the ledger that transfers Bitcoin from one person to another person. This data structure has inspired people to think about other use cases besides specifically Bitcoin. There are hundreds, if not thousands, of other cryptocurrencies out there. There's also people thinking about non-financial use cases. Most of the times, these use cases are in places where there's a lack of a single trusted third party. You can think of it as a database that a lot of different organizations need to work on together. So that's how I would characterize the notion of a blockchain. It's a database that multiple distrusting parties are building together, and because they don't trust each other, you need sort of these things built in: digital signatures, hashing. It's verifiable, it's auditable.
So in unmasking blockchain, then, there's another assumption that I think I also have, which is that blockchain is very strongly related to something very technical. Can you explain why that might be on my mind? Why is, because you explained it as a ledger, which is literally just a list of transactions. Why then are we talking about advanced computer programming and cryptography and a lot of other very technical fields immediately as you say blockchain?
Sure. I think I'm a little biased because I'm a computer scientist, but I think that the key innovations here, we're putting together certain technical pieces that had never been put together before. And I mean, cryptography is a challenging field. It's not something very simple to understand. And you know, this field really brings together so many disparate areas. There's cryptography, there's networking, there's security, there's databases, there's distributed systems, there's distributed here at MIT in the media lab, instead of in the computer science department or the economics department. We're really trying to bring together all of these disparate areas.
So we'll talk a lot more about what you do at the Media Lab, but would you then say that one of the reasons that you are at the Media Lab is that blockchain has a kind of a user complexity? There's some issue here for the user of a blockchain that is sort of unrelated to the underlying creation of a blockchain.
I think it's certainly something that's going to affect a lot of people, and it's going to change the way we think about money and wealth and transfer and financial transactions more broadly.
Right. All right, Chris, let's move to you for a second. You are involved as a practitioner in this game. In the break, we talked about the Bitcoin exchange that you run. Can you tell us a little bit about why Bitcoin needs an exchange in particular?
Sure. Hi, everyone. My name is Chris Yim. I'm co-founder and CEO of LibertyX, and we are the largest U.S. retail Bitcoin exchange. And what basically that means is we have thousands of stores around the country where you can go in person and buy Bitcoin. And it's really important to make it easy to buy Bitcoin because, you know, when you hear about this technology for the first time, one thing we keep hearing from our customer base and from users is how high friction, how intimidating the whole thing is, from learning about it, researching it, and then when you actually decide that you want to try it out, waiting a week to get your bank account verified, after which, you know, you're not really interested anymore. So our goal is really just to make it so that we try to make it as similar to, you know, what you're already doing on day-to-day. So we work with retail stores. You go to a local store, you pay a human cashier cash, and then you get Bitcoin in your wallet immediately that you can go and spend. And I think once you have a little Bitcoin, you realize that it's not tulips, it's not fake money, and that you can actually do a lot of amazing things from it, whether or not it's, you know, storing, investing like a stock, buying things online, sending money to your friends and family overseas. You start to really partake as a participant in the ecosystem, and I think that that's really critical for attracting more talent and building a strong community on top of the blockchain, and, you know, building really interesting applications. But really, the unsexy first part is you just have to make it easy for people to get that in the first place. Once you have Bitcoin, you can trade it for, you know, 1,000 altcoins or, you know, whatever else out there, and you actually have the underlying currency to partake in these blockchain protocols.
So Chris, maybe you could clear up one more thing for us as a terminology. So there's a lot of discussions in some circles these days about something called an ICO. And to many people, that sounds very close to another term called an IPO. What are the differences between an ICO and an IPO, and what is the fuss all about with ICOs? Because coin is the middle term here, and that's your expertise. So tell us about this coin raise.
Sure. So an ICO is the initial coin offering, and it's this new mechanism to essentially raise funds, usually crypto funds. And just like, so Bitcoin is probably the original blockchain token. What people have realized is they can piggyback off Bitcoin, just changing a few parameters or changing more to make a different coin, and you can actually build a platform and sell it to consumers. So typically in an IPO, you offer equity in your company to institutional investors, to individual investors, what have you. With an ICO, you're actually creating a new token, and you're offering it to anybody that really wants to buy and be part of the ecosystem. And it's particularly interesting today because this is an area that is not regulated. So you can raise from individual investors globally around the world any amount of money, whereas typically to get into an IPO, you have to have north of $100,000 or $1 million be accredited. And I think that what's particularly exciting is you're really seeing a democratization of money. If you have money, now you can partake, use it, invest it however you want. There are some challenges because historically IPOs are highly regulated, and I think that depending on what ultimately pans out for crypto, it will be regulated as well. One of the challenges in the beginning is Bitcoin, people aren't really sure what it is. It has properties of money, as properties of a commodity. The IRS considers it property. And I think that because it's such a novel concept, because it's technology, because it's online, a lot of people are still trying to figure out how to correctly call it, how to regulate it. And that's kind of why there's been this resurgence in the ICO space. And a lot of people just are really excited and want to build their own payment method, and ICO lets them do that.
We'll get into the specifics and some examples of that later, but now I wanted each of you to just tell us a little bit about, so we're still in the here and now. Tell us about some of the projects that you either are involved with and are the most fascinated with, within the fintech space right now, or even you can point to some projects that you're looking at and find interesting to the audience. Maybe something that's slightly surprising, maybe some of the newer things, because I think, digital money, it's obvious to some people that, you can start buying regular goods with it, but there are also some very surprising use cases, and I want you maybe to focus on some of those. So, Jennifer and Neha, why don't you kick it off with just some examples, either from MIT or from your previous experience, both of you.
Well, as Neha alluded earlier, blockchain, given its nature of, basically it's a new way of organizing information. It's a new way of thinking and shaping the relationship between transactions. And at MIT, we had a chance to get involved into a large, one of the largest sort of oil companies in the world. And it's amazing to see how deep they've been thinking about using blockchain to upgrade their entire system. This is non-financial. And within the company, they have already set up 40 plus initiatives. And one of the biggest is in the upstream, exploration. In the past, there's a tremendous waste because, oil is expensive and there's enough money to be made. And now when it comes to the margin expression, they need to figure out, okay, we need to do this more efficiently. And what's the best way to do that? Because you have suppliers, you have the shippers, you have warehouse management, you have all the machinery, and you have all the contractors, subcontractors. And the most surprising thing they were telling us was just often out of nowhere, they can get a bill from someone saying, hey, you still owe us $5 million from 2 years ago. It's where'd this come from? And he was saying, the company we're talking to, they were saying like even in the upstream, there's like hundreds of millions of dollars wasted in this space just by miscalculating, miscollecting, and miscommunication. And just like seems like just value on the table can be hopefully easily fixed by the advancement of technology, and they hope to tap on that.
But explain to me how that is so easy to capture, because I'm willing to believe that there's inefficiencies in the upstream economy in various oil supply chains. But what I don't quite understand, I guess, is the business case for fixing all of that with a peer-to-peer exchange, given that, like banking, right, it's a world with players that already are taking rents and they're quite happily extracting those rents. How do you move into a market that is full of players who are quite happy to do what they do? I guess it's an innovation conundrum, how you get that going.
Exactly. Let me give you another example. Back to the banking industry, the typical DCM business. IPO is another, but let me give you a DCM business. Like when we typically doing the private bond issuance for large corporations, it's an army of people. You have book runners, you have co-managers, and book runners, you have global coordinators, you have, some senior bookkeepers. Just by hearing the name, you know what they're doing, like global coordinators and book runners. And normally when the company goes to the market to issue their debt, from the moment they were saying the deal is done to the moment the money in their account, it typically takes a couple of days. Because you just got probably dozens of banks collecting the money from different institutional investors, and they have to consolidate the ledgers. They have to centrally clearing all this process at exchange, for example. And 2 years ago, NASDAQ had this first pilot project using blockchain to do the first privatized debt issuance, and the entire process took about 18 minutes.
Okay, so that sounds very exciting from the perspective of the people trading in the market, apart from if you are a bank. Can you explain to me why any rational bank gets involved with either Bitcoin or blockchain?
Well, actually, I think Bitcoin is a different story. I think we may touch on that, but I think blockchain is going mainstream in a core banking these days. Like last month, JP Morgan just announced their major initiative working with Royal Bank of Canada and ANZ basically to launch the global payment system, which basically settles in days settle in hours rather than days, right? It's still, in nowadays, probably 10 minutes is a distance passed. Hours still sounds a lot, but it's a big upgrade already. But the difficulty, may have a sort of more to elaborate about. But the experience we had at banks in terms of blockchain or broadly in fintech adoption, and in the case of the large EMP company, it's not necessarily just about the technology. It's about how you bring everybody to the community together to have a new governance model, how we share data, how we censor data, how we manage the data ledger's integrity. And this, not everybody tend to agree. This whole process becomes difficult when typically moving beyond the technology. Well, it's reasonably okay to produce a prototype, but prototype never tells you who's gonna buy in on what part and how much you're gonna buy in. And as we talk about later, like this is a new way of organizing money and information. Like that means someone has to give up the power on the ownership of innovation. Is everybody willing to do that? At what price? And that is a difficult part.
That sounds like the difficult part. Now, why don't we switch to you for a second, because there are any number of projects under your umbrella, or in the peer-to-peer world, I guess they're not under, they're just part of this massive blockchain groundswell that you lead at MIT. Tell us a little bit about, the most exciting projects, the most surprising ones. How do you even wake up in the morning and prioritize what you're going to do in this business? Because it would seem to be a very kind of amorphous project structure.
Yeah, I've been struck by how many people look at this technology across so many different industries and fields and see something inside of it that could potentially solve their problems. So databases are something that pervade our lives. Like your mobile phone probably has a dozen different databases on it. If you think about it from that perspective, how prevalent they are, then a different kind of database that helps people who don't necessarily trust each other work together, you can see how that might be a powerful concept in a lot of different areas. I've been really interested to hear from people in healthcare and medicine about how they see this technology potentially being useful by putting patient records in the hands of the patients and creating something that's portable and can be used across different organizations. So they see this technology as a place where a lot of different companies and other sort of medical healthcare actors can come together and standardize. So it remains to be seen if this is really true. I mean, the medical healthcare industry, and particularly patient records, is something that's fraught with there's a lot of regulation, there's a lot of incumbents, so we'll see what happens, but it's very interesting to experiment with it. Another interesting area in a project that we're working on is in the area of music. So there's an initiative called the Open Music Initiative, and it was started about a year ago, and the idea behind it is to get actors in the music industry together to agree on a format for how to store who owns what rights to what pieces of content. This is actually incredibly challenging. In one of the first meetings of the OMI, there were companies there that were actively suing each other at the time. There were lawsuits between different members. It's a very aggressive industry. There's a lot of sort of anger between how they're going to continue to make money, given the fact that we're moving from buying CDs to just streaming content online, sometimes not even paying for it. It's just advertising based. So as that industry is seeing this huge shift in the way that they can make money off of music, they need a technology that'll help them come together, given that there's such distrust. So this technology was sort of, part of the reason that they were all able to get into the same room and start to talk about standardizing. And when you think about it from that perspective, you can see how it might apply to a lot of different industries.
So that's exciting. We'll pick up on the standardizing for a second, but one thing popped into my mind is there are so many applications potentially for, let's stick to blockchain, and this would be a question to all three of you. One, are there any fields that you have seen not try to apply blockchain, or where there would be a reason not to even attempt it? Or two, what are the fields that you find are slower in adopting this kind of approach? I mean, if you look at all the digital currency initiatives, is there any kind of domain that is, like suspiciously absent from your project portfolio?
That's a great question. I haven't thought about that before. That's
why I'm here, give you a challenging question.
It feels like everyone is thinking about it and talking about it, so I don't know that any specific industry comes to mind. I do want to stress that at this point, it's not about adoption, it's about experimentation. So people are really experimenting to see if it'll solve problems, not necessarily in a stage where they've already identified those problems and are adopting it.
So where are we then? Chris and I were talking in the break about where we are with this, and Chris first made the point that we are in the same kind of wave, and it's been said before that this whole digital money situation and maybe blockchain or maybe both puts us, with a platform technology of maybe equal or even some people would say far greater consequence than the internet itself. Obviously, it also builds on the internet, so it's a little an unfair comparison, because how do you compare something that builds on something that's already a network? But where would you say we are if history is any lesson, which it actually isn't always, but let's consider the internet back in 94, 95. Do I have any takers? Are we in 97 with the internet, with blockchain now? Are we in 2000, right before a dot-com boom and collapse? Or is it a completely different dynamic? I'm going to give this first to the banker.
I would try to imagine we are using internet as an analogy. We are literally in the 95, kind of 94, 95, and trying to imagine what a mobile banking will be like. What do you use your WeChat Pay or Apple Pay is going to be like. That I think the future, it's probably hard to imagine at this point what exactly shape. It's literally like when you're standing from the first Ford T and you're thinking about Tesla. And it will be going through generational changes, but I think this right now it's a good start. Going back to the question, I think the way I think they organize the entire industry, well, back to my industry, financial industry, it's going to be different. In the past, why the financial industry is so hard to change and it's so hard to be disrupted? Well, number one, there's regulation, right? Well, because this industry manages somebody else's money. And as long as still holds true and the regulation is being there and the very top, that I don't see that's going to change. But the second is it's play by size. And the name of the game mostly is the balance sheet. And without balance sheet, it's very hard for anyone, as we see startups, typically they are lighting asset, but heavy in intelligence, very hard to probe into. But now we're seeing, based on potentially the blockchain or sort of the new transaction system, new database managed system, we're able to, stack a whole suite of applications to be modularized. Mm-hmm. Well, recently, Goldman Sachs announced they are, this is not just blockchain, but they are announcing they are basically splitting the entire IPO process, initial public offering, into 127 or something like that steps. And basically, not all these steps are capital intensive. And the reason in the past we cannot have the third party getting involved because there's different data inputs, and the credibility of all these data inputs is a problem, right? And with new database, with a new information management system like blockchain, this can be possibly true. And this needs to be optimized. Banking is not necessarily be best at every single steps among 127. And in the future, in the past, I think the financing has been really internalized. A lot of these functions, one big chunk, IPO, DCM, ECM, or whatever. But in the future, I will see that more likely to be externalized, and with more involvement with startups, with fintechs or blockchain companies, and that is going to completely change the whole landscape.
So there are many ways we could take this discussion. I'd like to slowly move towards what might the audience think about this, but let's try to take a couple of takes on that on our end first. So what are the potential ways that our audience here, so I guess a mix of students, professionals, some corporations and investors, should and could get involved with digital currencies? What is the best way?
Yeah, that's another great question. I mean, I think at this stage, it's just great not to dismiss it, right? So read about it, learn a little bit about it, play with it. Don't necessarily put your life savings into some strange token, please, because this could all. I think most of us in the industry see what's happening now as a giant bubble that's probably going to pop. So be careful there. But I think just embrace it and play with it a little bit, and buy some Bitcoin at one of Chris's retail stores, and just sort of familiarize yourself with the process. And I think if you want to compare this to the internet, I think that we're actually in the late 80s, so we're pre-web right now. We're pre the user-facing sort of nice interface on top of this. We're still working on sort of core protocols and trying to figure out what that's going to look like. And so if you think about it from that perspective, well, how should you have familiarized yourself with the internet before the 90s? And I think, you just know what's out there. You experiment a little bit.
So that's kind of the learning aspect, is just play with it. And you clearly think that this is an essential thing to know. What about the fact that if you look in hindsight at the internet, there are a lot of us that think, wow, I should have been deeply embedded in some massive startup that now has the name of, Google or Apple or Facebook or whatever it is at this point. What do you say to those people? And we'll get into startups in a moment, but I don't know if that's what you were going to talk about, but where are the financial opportunities? Maybe for the risk taker, maybe for the non-risk taker. Is there any scenario by which you can now safely invest in cryptocurrency? Would you advise anyone here? Let's say, they said, I'm going to invest my student loan. I'm going to take it all out this year, and I'm going to invest it, or invest my grandmother's. Where I was going to buy my apartment, and I'm going to invest it in cryptocurrency. Do you advise any of those things?
I will be a little bit cautious investing, cryptocurrency myself at this price. I think nowadays, Bitcoin, the word comes often attached with another word, which is bubble. And well, it's a whole subject of a debate, like how much really worthwhile, right? Like how much Bitcoin is worth. But one thing I think just from our observation is the price pattern has exhibited very much like the value of the social network. Mm-hmm. So literally the value goes up is in the square of the numbers of active players. And with Bitcoin is a multiple there's multiple multipliers of that as well. But I think a lot of the mania if you call this mania, is being driven by some kind of very typical behavior patterns that we have seen in the past, like .com bubble, for example. So I will be a little bit cautious saying, I'm so intrigued by blockchain and I have to jump in right now to buy one Bitcoin. I would not equate these two together. But just, trying to answer from different angle. These days, I just keep getting calls and getting into the dialogues from a lot of, financial practitioners, even from like some senior bankers. It's like, what shall we do? What can we position ourselves for the future? Shall we stick with those behemoths, the big banks, or shall we jump to the startups? Shall we do the fintech or do the tech thing? And where's my career going to be? What is the job that's going to be future proof with all these exchanges? So, my general comment is like, no matter what we do now, like especially I think we are all very interested in finance, find a spot that make your creativity to thrive. It can be in a fintech, probably it's easier, but in big organizations, I see like major banks are still very, very actively and aggressively purchasing, so in trying to upgrade themselves as well. We see State Street have like 3,000, tech center in China, and JP Morgan invests annually $9.6 billion into technology nowadays. Well, by the way, JP has more software programs than Microsoft. Can you imagine right now? But the nature of work is different, but of course they are coming probably slower from different angle, but they are investing. And the big thing about these major institutions, this is why I just don't simply deny them, because they have deep resources. And for startups, like JP has this in-residence program. So literally just inviting some of the key startups to come in and hooked up in their data system, because you do need like iterative proofing in your model before it really takes off. Imagine that 127 steps in the IPO process. You need a constant trial and error process. And the banks, they may not be the best person to explore that because they cannot afford to make any mistakes. But they can work and collaborate with startups in that space. And whether you want to be on this side or that side, specifically depends on the position you choose yourself. So I would say, my advice is really nowadays probably it's just as important to work for the name on the building as to work for the name on the door. Just carefully choose your specific task and then position yourself.
That sounds very wise to me. Let's for a moment go back to Bitcoin. And so the valuation of, or the market cap of Bitcoin arguably is around 90 billion right now, Chris. And to Jennifer's point about network effects, you could either say that's a massive amount of money, or you could say we are 4 geeks here and there's another 120 geeks here listening to this, But largely, if you divide 90 billion on, sane people in the world, this is a pretty specialized effort.
Yeah, no, I think you hit the nail on the head earlier when you were talking about, should someone buy into this, what's the right value? And I think what you have is something that's truly a unique asset being created right in front of us. Taking the internet analogy for a second, like buying Bitcoin is kind of like buying TCP/IP, buying a piece of the base layer that's just never existed before. Is it valuable? Probably. There's a finite amount, so a lot of people like that kind of finality out there. I think what it's pretty clear to me now is that the killer app for Bitcoin today is as a store of value. So something more akin to like digital gold. It's been around 9 years. Every time Bitcoin doesn't die, it becomes more and more trusted, more valuable. And you're talking about a platform that has one of the worst customer experiences, user experiences out there. Like, it is pretty awful. It's still incredibly challenging to buy Bitcoin, and I think like everyone who's in the industry recognizes that, but it just takes time, right? Bitcoin's only been around 9 years. I think the real opportunity is that there are no real experts. If any of you decide that you get really fascinated by crypto, by blockchain, you can go ahead and network, talk, learn about it, and you could probably become one of those experts, in a year or two. And I think that that's never ever happened before. And the other beauty is it's all technology, it's all code, right? So you don't even need that much money to start something. Hopefully, actual value-add applications are built on top of that provide profit and are models that previously weren't possible. But I think that that's part of what's really, really interesting and what's going to attract a lot of the real talent. As far as the valuation of Bitcoin, I think we have a long way to go. If you look at gold, which is not the best proxy, but gold, it's hard to prove that you have it. You can't really spend it. Its main value is that it's been a store of value for thousands of years. But things change, and I think for the first time, you have a real contender. You have something that is proven with math, right? Like nothing is stronger than math. If you think about computers, all they do at the end of the day is they do a bunch of calculations, iterations. Bitcoin is computer money, and I think that's what's going to be powering the future world.
So we're going to soon open up for the audience, and please start preparing questions. I have one more. I just wanted to put a little buzzkill in there for a second, and we're probably the wrong ones to do that. None of us are regulators. I have, I happened to work for a regulator a while back, so I think I can get into the mindset a little bit. Are there some possible reversals or foreclosures on the horizon, or even just basic regulation that could revert or drastically alter the direction of any of the things that have been going on now to the point where a completely different system would emerge? Or do you all see like, okay, it could be a bubble or not, but generally it's going in one direction, which is, I guess, progress, for lack of better terms. So maybe some comments on either the regular horizon or flukes and crazy things that could happen still in this emerging system. Simple question.
Maybe I take a first step. Well, in January, I attended one seminar. It's organized by lawyers. So it's a closed-door seminar with the Yale. And actually, that time, Jerome Powell, which now the new Fed chair, was there, and we talk about the whole blockchain stuff and how is that gonna imply the changes in the whole smart contracting. How smart and how legally binding would that be, even for the few jurisdiction. And the comments from there is it's very interesting. U.S. probably I don't think they're closely watching that, but it's not in a position yet. They feel like, okay, this is something we got to do. It's literally, he just expressing this opinion. And the reason he was saying is, look, back in the Bush administration, we have like 14,000 banks. And now we're coming down, through the different liquidation, merger, acquisition, different financial crisis, we have 7,000 banks. And this is such a gigantic ask to get 7,000 banks to come together to agree something from the regulatory perspective. And I have some conversation with Chinese bank. The Central Bank of China, PBOC, they established the Digital Currency Institute officially. They have been doing their work since 2014, so it has been really long. And the initial, 14 white papers and announced their prototypes actually clearing the security systems. But the way is, what will be the possibility to have the cryptocurrency, but issued as a fiat currency? I think this is a direction that the central bank is also carefully considering as well. And can you imagine in a world that, the appeal of Bitcoin is there's no government involved. There's no third party validators need to be involved. There's no banks involved. And imagine you have regulators and governments sit on top of the whole, manage the peer-to-peer system. What the scenario will be that like, right? We don't know. I don't think anybody has a ready answer, but we do see many of the central banks are very, ambitiously pursuing the investigation. We see the Australian Bank, Singapore, MAS, and Bank of Canada, and England, and also China. And many of them they see that from a different angle. The next 50 years, it's going to be a time period where finance should be more inclusive. If look at how U.S. coming to this state, it's like a massive system. You have all the different institutions that congruence what we can possibly offer, like what we do with credit cards, for example. Mm-hmm. There's no way for the emerging markets, for the billions of people that have that access of information or the financial access, but with possibly a fiat currency, or in a digital way, they're thinking they make the community more inclusive in access to the financial services. And also, the identification management, the counterparty risk. There's always yin and yangs of everything, right? It's a very dedicated balancing act. But in the end, we have to, that comes to, I think, with all the major technological advancement, it's involving all this morale and ethics judgments in there. What are we going to trade off for the gains versus, what do we give up?
Jennifer, we're going to go to the audience, but one term that you were using that I forgot to define early on, fiat currency is a term you use a lot, and it's thrown around a lot as if it's self-evident what that means. Can you just explain to me why do you need to use the term fiat currency? Aren't you just talking about non-crypto?
Fiat currency is a legal tender, right? It's just someone give it to you, you have to accept. This is legally obligation that you need to take and give. That's why we call it fiat currency. So imagine if central bank, I don't know which central bank is going to be the first one impose that I have a fiat yuan or sterling or Singapore dollar that is, I want to pay you for a cup of coffee. They just have to accept that. And right now, it's totally voluntary system, right?
Right. Okay, so with that clarified, I wanted to see, and I think there are some mics here too, and any question is fair game. That means simple question, hard question. This is a panel, they have dedicated their time to you. Some of them are very smart, others like me are just trying to hang in there. We can take a question back there. In fact, we're going to take a question here, and then we're going to march the mic all the way back to you. So, gentlemen in the front row here.
Hello. So my question is about the energy consumption. I just did some rough math here. So currently, you're using about 3.4 gigawatt, instantaneous power usage to run the Bitcoin network. So that's about 3.5 very large coal power plants. And I just looked at the number of Visa and MasterCard transactions. And from that, I estimated that just for the US, to run the Bitcoin transactions, you'd need about 2 terawatts of power consumption, which is roughly around what the US uses right now. So how is that sustainable, especially because we're at sort of the top end of a logistic curve as far as the computing power? And you've already moved to GPUs and ASICs, so where are you going to get the extra energy efficiency
All right,
from?
I think we got the question. Good question. Possibly not the right panel to fully understand it, I would say, but I'm not going to speak for panelists. Neha, you seem like you want to take a stab at this one.
So first of all, you can't just multiply the current amount of energy usage to get more transactions. It's not a one-to-one linear relationship like that. They're actually totally independent numbers. So just FYI. The energy usage is a big problem, I think, personally. However, there's a lot of different arguments to be made. So one argument to be made is, well, this is for the security of a potentially global currency, and maybe it's worth it to spend a bit of energy in order to secure a global currency. Literally, the more energy used, the more it costs, the harder it is, the more expensive it is to undermine the security of the currency. Another argument, I think, which I'm a little bit more excited about, is, well, can we think of other ways to secure the underlying currency? In particular, can we think of non-energy intensive ways to secure the underlying currency? And there are people who are thinking about that, and I think that it's a serious possibility that we might move in that direction. I also want to make the point that the energy usage numbers sound very big, but from my understanding, a lot of the Bitcoin mining is what it's called, is located in areas that are using like a lot of hydroelectric power, for example. So this is sort of, and it's kind of in strange areas. So it's not clear that this power would necessarily translate into power that would be useful for a lot of people.
Just adding on to Neha's comment, not every transaction, you made the allusion to Visa, MasterCard. Not every Bitcoin transaction has to be on the network. There are a lot of really interesting level 2 applications being built on top of it. Lightning is one, where you're basically doing things off-chain between trusted parties. And I think that the net effect is, you don't have to spend as much, you don't need as much, quote, mining power to do a lot of the transactions that are taking place today. But I think the point is valid, right? Like, is Bitcoin a medium of exchange? Is it a payment protocol? Is it a store of value? It's still pretty unclear, but I think that a lot of people are working on these problems and these applications to help solve that. That might be one of the tipping points that maybe it doesn't make sense that Bitcoin is what you use to buy gum at the local store. Maybe it's used for more high-value transactions. Maybe it's closer to like a wire transfer or things like that. I think that's what makes this a really interesting experiment, and what people are trying to work really hard to figure out.
Can I spin his question in another direction? So one thing that I've actually been thinking about is the GPU shortages that could result from this kind of complicated system. So I mean, part of the answer might be that there are decentralized transactions not requiring the network, but wouldn't another risk, of kind of stopping this show be if we discover that there's actually major CPU shortage and that certain people are hoarding CPUs and GPUs, and we basically don't have the computing capacity to actually build this kind of network, or that some people might try to grasp control of that resource, which arguably is scarce. I mean, I don't know, is that something? It could be a technical question. It could be, in essence, a risk question, right?
Yeah, well, one interesting thing is cryptography is what really underlies almost all the coins. So you could change the algorithm. You could basically, Bitcoin uses a specific algorithm. They've built computers that only can mine this algorithm. If you change that to something else, then maybe your smartphone is the best device used to mine it.
Okay. Well, let's move on to some other questions. I'm going to get there, but the gentleman in the back now has the mic, and then we're going to move here, and then let's see.
Yep. Thank you very much for this great panel. At the end of the discussion, I remember the panelists discussed about regulatory issues. And I would like to ask a further question about the regulatory issues about Bitcoins and ICOs, specifically in China. As we all know, recently in 2017, Central Bank of China and other regulatory bodies called a stop to ICOs and Bitcoin tradings, and they're taking really tough regulatory measures. I was wondering how the panelists would comment on these regulatory measures. Do you think these are the reasonable regulatory steps to take, or do you think these regulatory bodies are making these rules simply because they don't understand these technicalities enough, and they just want to, for safety's sake, to call this to a stop. And when they understand this enough, they will resume this kind of business. And how would you project the future regulatory direction of
Those are two questions. We only allow one at a time. Those are very complicated questions. The first one I think we were touching on. Who wants to take that one? We were talking about regulatory changes, and I think Jen started talking about China. Does anyone, do you want to repeat what you said, or maybe clarify what you were alluding to about China's
I think,
regulatory stance?
With all the great things, what the government wants is still, the stability. That is a word, behind all of these sort of explanations on the policy in the first place. Because as we understand in China in the last couple of months, actually China has been going through, I think, since 2013, right? One of the sort of major countries really jump into this Bitcoin space and sort of taking 90% of trading volumes, like significant of mining powers, etc. Till that point, the government has been really saying, laissez-faire kind of attitude. We don't interfere, let you innovate and see where it goes. But it comes to, that's what we see, that everything has its pros and cons, right? Right now, the thing comes to the point, because of the price rise too much, like a steep rise in the popularity, and we see a lot of people jump into the game, especially in the as pure investors. They not necessarily understand the risk, and we see from some of the numbers from the leverage. In China, people are not just buying Bitcoin; they're buying with leverage. Can you imagine that? And they are trading on the OTC market, which is basically creating a side market, and which effectively, side market in the WeChat. And you and I, with four of us, exchange Bitcoins, and we settle with one of the Bitcoin platforms, which is platform itself is under regulated. So imagine that kind of the risk, given how intense, like China's trading 90% of trading volume. So I think the fear is if we get that out of control, that's going to kill this technology or this whole thing altogether in the future. Rather than we just stop and like quarter it down, and let's see, at least within China, people don't have the easy access. Like all the enthusiastic, as I know, in China who want to invest Bitcoin, still invest in Bitcoin, but just find it different ways. But you are preventing, the grandmas and just jumping into some WeChat platform saying, I'm going to buy one Bitcoin from Tron.
So am I getting the sense here from some of you in the panel that there is a smart way to play the regulatory game, and that it is somewhat necessary to do something? Because I think, one way to read the question would be, any regulatory stance is just negative, and, tech is progress and let it all fly. But basically, this is such a complicated structure here, we seem to agree, that some ground rules could be warranted. I don't know if both of you want to comment on that.
Yeah, I just would say that I think Pandora's box has been opened, and so long as there's internet and computers, everyone has a smartphone, there will always be this concept of Bitcoin. And what I think people don't give governments enough credit. This is definitely on the radar of pretty much every country out there. You just have to weigh it, like how high is this? How important is this? And I think that what we're seeing is that probably countries where their currency isn't doing so great, hyperinflating, demonetization, those might be the places that might be first to adopt something like Bitcoin, because there's a lot of value add there and it provides a lot of stability. But the concept of a global currency that anyone can partake, I think, is really, really compelling. And don't forget, we have 200 countries out there plus that are all competing. They all want the talent. They all want to be the future U.S., if you will. And they can. I think a lot of them are seeing this as a way to play their card, get ahead of the pack. I guarantee you, some country at some point is going to adopt some type of cryptocurrency, and they're going to probably do quite well as a result.
Now, maybe the way to ask you to answer the question is, what kinds of governmental bodies are coming to MIT and to the blockchain initiative to try to, I guess, understand it or engage with it?
Yeah, we actually speak to a lot of regulators. I've had conversations with the SEC. We talked to several central banks as well. Actually, a former central banker is on my staff and working on digital fiat currency. The Monetary Authority of Singapore just joined us formally and made an investment in our group. They're really, what we've noticed actually is regulators are very optimistic about the technology, and they want to be careful, and they don't want to squash it too quickly. I think we are going to see some crackdowns on the ICOs, the most egregious ones, because they are essentially securities and they are in violation of regulation. So hopefully there'll be a little bit of curbing of the enthusiasm there. But mostly, most of the regulators that I've talked to have been quite excited about what's going on.
Does that mean that you advise against an ICO? I'm asking personal advice because we're thinking about it for one of my startups.
I definitely advise against doing ICOs right now. I think 99% of them are outright scams, and we're seeing it's not a good situation.
Doesn't it depend if it actually is a utility token that you are building?
I think
right?
the problem is that a lot of people are describing what they're doing as potentially being a utility, when in fact all they've done is written a 2-page white paper and put it on the internet and then collected money from people. So,
but I mean, isn't that going to be the shakeout then, that the only survivors in this game in front of a regulator is going to be people who have already built some sort of platform that can substantiate that the tokenized, that's another word we haven't explained, a token.
So I think this all comes down to the Howey test, and the SEC has said that they are going to continue to apply the Howey test to figure out what is a security and what isn't a security. Whether or not utility tokens pass that or not is still an open question, I think.
Could you please define token and tokenize for us? I have a second question here, but we never defined that. So blockchain, we have defined tokenized, and tokens in terms of a blockchain exchange is something I don't think is immediately apparent. How would you define a tokenizable platform that legitimately uses tokens?
I might be the wrong person to ask about this, because I don't think that we've really seen one of those yet. I think that we're still in the experimentation stage. I think the argument that people make is that if there's some kind of system, for example, file storage, and we all want to offer up the extra file storage on our computers, we can do so, and we can create a token to track the value that people assign to, a certain amount of file storage. But perhaps someone else wants to.
Well, I think it's an important question, because if we're saying that regulators will want to crack down specifically, so I mean, it's been a known thing that regulators have been fearful about Bitcoin, but now the idea of cracking down on something related to the blockchain is actually of perhaps far more significance than cracking down on Bitcoin, which it's evident to everyone that a speculative currency needs some rules, right? I mean, I'm just generalizing here, but when you start cracking down on blockchain, which is a technology and a ledger, and you start saying some things are not worth being tokenized, that's a whole other story. Anyone want to comment on legitimate tokens?
Well,
I think that probably will be the regulatory battle that we are going into in the next 3 years, right? What is a legitimate token?
Well, let me take a step back on your first sort of the comments about the crackdown on the blockchain related. I think it's just beyond the token. I think we talk about sort of the whole financial services being modularized, right? And the fact is, in the past, regulators have been very used to the regime. Basically, you are supervising the major institutions by granting them licenses, who can do what. And now suddenly, you have opening up the entire ecospace, potentially with technologies, advancement, that's not just licensed financial institutions can do this type of functions. You have, along the entire chain, many startups can come in. So for them, it's no matter about supervising institutions, financial institutions, it's about supervising the functions. And whoever can perform that function, like ICO, right? It's not, you are doing ICO or IPO, whatever you may call it, you have to be subject to similar standards about prudence, right? Fiduciary duties. And that's a place they feel like, how am I gonna regulate a startup in the same way that I regulate a financial institution? I don't think regulator space are not, ready. They don't think they're ready to cope with the entire eco-space change. Banks are not ready. I don't think regulators are there. Well, everybody's learning, and it's taking some time. I think that's why they tend to be more cautious. It's a trial and error, touching, cross-river, touching the stones. So the worst thing they want is something spinning out of control.
All right, I have spoken for way too long. We have a mic over there. Go ahead, Tikran.
Hi, yeah, it's a very fascinating topic. I have one question. In regard to the money supply, because I understand that the money supply has been gradually very, very difficult gradually, and how does that support the underlying the whole society as economy grows? Can this type of infrastructure support the future economic growth?
Okay, so it's a question about the scalability of this whole thing, and I guess it goes back to this question we've been wrangling with for a while. Is this current market we are in, is it even large at all? And yeah.
Well, I think one thing that's so interesting about this technology is that for different currencies, you can set the money supply to be whatever you want it to be. So Bitcoin happens to have a certain money supply, which I think is encouraging its use as digital gold. It's something that people want to keep as a store of value since there's a limited amount of it. But other cryptocurrencies have very different monetary supplies. And I think some of the research we're doing is looking at what is the right monetary supply, what is the right inflation rate. In terms of the scalability, I think Chris mentioned this already, but people are working on layer 2 solutions on top of blockchains that have similar sort of trust assumptions, but can be done off-chain, which I think will really help with scalability quite a bit.
Yeah, I think what's really interesting about crypto in general, it's like a big sandbox. There's a lot of experiments. I think Bitcoin is, some people view it as like the curmudgeon, very, very slow innovating, but I think the most important thing is that it does what it says it's going to do, which is basically perform transactions. It's that store of value. Whereas you have other tokens like Ethereum, other ones that have forked, and then, you're changing the underlying assumption. Maybe you're changing how many coins there are going to be, what the inflation rate is. People are still trying to figure out what the happy medium is, and the short answer is no one really knows. Outside you being somebody in the government of a country, you never really had the power to play around with these variables. Now we're seeing this economic experiment at a grand scale with people all over the world. There's going to be some.
You seem to say that there's experimentation, but is the scale actually of the size that the question here is sort of, I guess I'm trying to interpret the question, but even though there's 90 billion in the current Bitcoin market, and if you look at these exchanges, so Ethereum, the IPO, I don't know, the ICO was 160 million, and in Tezos, obviously, even larger, 270 million for a new token exchange platform. Right. But do you think those are large numbers or are they small numbers? Because the gentleman's question, is probably is there an order of magnitude here that we either haven't seen or we need to see before we even are reality testing this on a kind of a global civilization level? Because you could say 270 million is a big coin race for a startup, but if that is going to be the next exchange platform for the future of our life, isn't the scale off by 100,000?
Yeah, I think stepping aside Tezos for instance, because I think I'm not convinced that was the right decision to raise that much money.
But let's just think in theoretical terms about any new kind of tokenized platform.
In terms
shouldn't they be much bigger than raising? Maybe that's just a pre-raise. But if you're building a new platform, arguably that you could trade human life back and forth, shouldn't that be much larger than 270?
Yeah, I think the question is what the right metric is. Market cap of Bitcoin isn't really valid, right? What's the market cap of the dollar of currency? It's really, people are trying to figure out what the right metric of adoption is. Is it velocity? Things of that nature. When you look at market cap, you're comparing it to a company. Bitcoin is not a company, right? It's a protocol that people are building on top of, and there's going to be tremendous amounts of, I think something like $15 billion of Bitcoin are traded every single day.
So you're saying the value doesn't lie in the protocols ultimately?
I'm not sure it's the right metric.
Anyone else want to comment on that? Because I think we are super early days. For sure, you say we're in the 80s, but in terms of understanding what we are up against, right? It's hard to find. It's hard to find where are the paragons. What are we comparing it against?
Right. Typically, companies raise capital. Bitcoin's not really a company, so it's like a very imperfect metric right now.
Well, we'll take one more question before we move to, and the panel will be challenged on their views on the future, which we were about to talk about. Future is always exciting because, you know, you can never be wrong until you're wrong. Go ahead.
Thank you for the panel. So the panel has touched upon a little bit like how different central banks has been exploring blockchain, digital currencies, and also in connection with fiat currency. I'm curious about how has some international organizations such as IMF or the BIS or the World Bank have been exploring such effort, and what's your view around this going forward, and also in connection with individual central banks? Thank you.
All right, so
Yes.
central banks and IMF.
So we've had conversations with the IMF and the World Bank. The World Bank actually started a blockchain lab not too long ago, and Christine Lagarde, the head of the IMF, gave a talk in which she said explicitly that central banks should not ignore digital currencies, that this could potentially be the future, and it was a very important space to think about. So I think that's very promising. A lot of the central banks that we talk to are running experiments. I think that's the stage where we are right now, and there's a spectrum of how deeply different central banks have gone into the technology, and that's starting to move forward. So there are a few central banks that are publishing their work, the Bank of England, for example, Monetary Authority of Singapore, Bank of Canada, and I think we're just going to see that grow.
Yeah, just quickly, there's an initiative called ID 2020 under United Nations. I think they just had their second summit in September. And the idea is literally to build on the blockchain concept and utilizing all the existing infrastructures like the House Organization, World Health Organization, United Nations. Like there's so many different resources they can put together. What they're doing, you call ID 2020, is to give every baby, especially in emerging market, an ID. They can be take at their birth and then can get adequate vaccine and help along their way. Like in most of emerging markets, like they give a paper when they get a shot. Basically, that's like worthless, right? It's like there's no way to track and to follow all these babies when they grow up. Have they get enough medical services? And this provides, I think, one of a very interesting platforms, saying unite even within the United Nations platform, get everybody agree to we share information, and we can. Like there's so much it just can easily leverage right now upon the existing systems, and give I think the blockchain a new dimension to that application.
So this is interesting. The unbankables, right, is a big problem in emerging markets. So you're saying that blockchain essentially, because of this peer-to-peer exchange, could move beyond the challenge of evaluating whether individuals are creditworthy or not, because it's an irrelevant question.
I think, when we started, we're talking about what is money. Money is information with value. That can apply to anything, certificate, your identification. And I think anything with value in the future hopefully can go with this, technology. I think the Bitcoin's brilliant because that is the first proven use case. And if a cash can run, like anything else, probably have a higher chance to run as well successfully on this infrastructure.
So I think we're moving into our discussion. I wanted to just, as we're rounding up here, ask each of you, one or two questions maybe. What do you see happening in the next few years? And also, so Neha, you said we're in the 80s. How fast are we going to move up to 2017 and 2018? I mean, how long is this road until something major will happen in terms of not just, in your words, experimentation, but actually implementation? And so to all of you, you can formulate it any way you want, but the next, let's start with the next 3 years, which I think is a long time in this space. What do you see emerging?
That's a great question. I I hope to see more adoption of cryptocurrencies, just more public awareness, more interest, more experimentation. It's really hard to answer that question. I think it's gonna take longer than we expect, and then once it starts happening, it's gonna happen faster than we expect. One of our core theses at the DCI is that this technology has the potential to transform the financial system. And so a lot of that is actually stuff that's not necessarily consumer facing. It's more things that are happening underneath the hood at investment banks. So I think that there's the potential for this to kind of break out of that and enable, I think Chris used the term democratization, the democratization of money, the democratization of contracts, of equity. We're just going to see it's going to be a lot easier for people to issue equity and create financial contracts than it is right now. And so what is that going to enable? That's a great question. There are companies with experimenting. There are companies that are trying things like, I'll start to pay you for answering emails from people, right? We might see more financial transactions that interoperate across different actors, different games, different platforms. We talk to people who produce content online about micropayments and what they can do with micropayments instead of advertising. So I think there's going to be a lot coming. I think about it more in terms of platforms and infrastructure rather than necessarily what that infrastructure might enable.
I think you're going to see a lot more regulatory and government clarity. Just in the U.S., the CFTC just approved the first Bitcoin futures market. The CME is looking to pilot. I think a lot of this stuff provides institutional level stability, which ultimately leads to the approval of the Bitcoin ETF, which means that anyone with a stock brokerage account, anyone that doesn't have access to Bitcoin today can buy some as part of their portfolio. And I think that that's something that a lot of people in finance are looking for. It's that non-correlated asset. Bitcoin does not follow really any of the same metrics that the broader equity markets follows. And I think that's really important from a portfolio allocation perspective. Also, globally, I think you have countries like Venezuela, Argentina, Cyprus, India, you name it, that are really struggling with their own currency, trying to figure out some way to, make it more competitive, get an edge. It wouldn't surprise me within 3 years if somebody adopts it, either not necessarily their national currency, but it becomes recognized alongside, similar to what Japan did in recognizing Bitcoin as a method of payment.
So I just wanted, and I didn't want to end on this note because I'm not sure if my story is correct, so I need Neha and others to correct my story, but isn't it true that every MIT student, like 4 years ago, was given $300 of Bitcoin? $100. And according to Chris and our discussion, a lot of them spent it on server costs and hamburgers, or didn't even take the money out because it wasn't enough to kind of go through the burdensome process of taking it out. So if smart MIT students, mismanaged a little bit some of their bounty 4 years ago, I think I'm partial to your theory that it's going to take a little longer for everyone. But comment on that story. I mean, I was maybe mischaracterizing it. So $100 went to every MIT student
in Bitcoin.
Yes.
And I think the plurality of students actually took the money but didn't spend it, which in retrospect was the wisest thing that they could have done. So
have it. So you were saying they have it.
Yeah, I think so.
They haven't lost their password.
Hopefully not. I don't know.
I say that because when wasn't going to share, but as I was walking or getting here, I was trying to look for my own Bitcoin and I couldn't find it. So I know I have it because I treat it like money, but it's misplaced, much like other types of money in my house right now.
Yeah, I think that, and that's the challenge, is the user interfacing part of this, and this is something that we have to solve. It's so challenging right now to own Bitcoin and transact in Bitcoin, and every single one of these technologies relies on the same underlying ideas of how users manage their security. So this is a problem we have to solve in order to make this work.
Jen?
I'm very optimistic personally, and I do think we are at the generational opportunity to see some major transformation on how we organize, the institutional relationship way beyond the financial industry. It's in the past, it's like there's we organize organizations, in a very hierarchical way, but I don't see that's potentially to be the same case in the future. So how we sort of take advantage of that, I think understanding the security and the value, the concept value itself, that's one thing I think is what Bitcoin, so the whole mania is doing us a favor is, I always see that more like an index of attention, right? The price itself, basically, well, nowadays data is abundant, but attention is very scarce. So at least you see more people trying to understand what is this whole blockchain thing and Bitcoin thing, and what is the blockchain. And collectively, personally, I do think, well, banks will be major movers to make some, changes, but probably some of the other industries, particularly supply chain, I think hopefully they have some major breakthroughs because there's less scrutiny basically imposed in terms of what they can do and what they cannot do. So collectively, if everybody is interested in saying what is blockchain, what is Bitcoin, I think we have much bigger chance saying we make this community moving towards that direction.
And with that, I think we need to close. I usually watched the clock. It was just too far up there. I couldn't see it. We have actually talked for a good bit about blockchain and Bitcoin and cryptocurrency and the future of money. If there's one word that expresses your excitement about this technology or fear, what would it be? And then we're going to end. You get one word. Chris?
Come back to me.
One word. To express your feelings around digital currencies.
I think I have a word. Okay, my word is democratization.
Good.
Autonomous.
Autonomous.
Opportunity.
Opportunity. I think with those three words, I want to close the panel. Thank you very much.
Thank you so much to our panelists. And also, as a representative from the e-board, we have some gifts for all of you guys. Thank you so much again for taking the time and leading in a really exciting discussion. Thank you. And in the meantime, we have an announcement from the e-board. As some of you may notice that yesterday, one of our keynote speaker, George Church, a professor of genetics at Harvard Medical School, wasn't able to make it here due to unforeseen personal conflict. We just got in contact with him, and he will